What's up, homies? It's time for another episode of the Homies Real Estate Podcast. It's your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together, we're going to break down this crazy real estate market. We got another really great podcast, especially for you veterans, for you active service members. Thank you so much for what you do for our country.
Thank you.
We figured we'd come out with a VA loan guide, how to purchase a home in 2022 using the VA loan.
Yep.
What it takes to qualify, who qualifies, the pros and the cons.
Yep.
We got our trusted lender, Angel, here, so I'm going to ask him an array of questions. So, Angel, let's jump into it. What is a VA loan?
Kind of how you touched in the beginning. It's for active military people actively serving in our military, along with veterans and or their spouse of a veteran who's passed away, would also usually qualify for that VA loan on their behalf.
Gotcha. Awesome. And is there some sort of certification of eligibility, or how does it work?
Yeah, so you have to qualify for what's called certificate of eligibility. That's a document that's going to be needed in order for you to qualify for a VA loan. And then if you've been discharged, you're also going to want to see your DD-214s, which are your discharge papers, as you people in the military know. And the people who qualify, I'll just read out a few of the requirements needed for people who qualify. So you have to be on active duty and served for at least 90 continuous days.
Okay.
If you're a veteran who meets the length of service requirement, which is generally 90 days of wartime or 181 days in peacetime. Okay. You completed 90 days of active duty service or 6 credible years in the selected reserve and the National Guard. And then if you're a surviving spouse of a veteran who died in service from a service-connected disability and you have not remarried, or if you remarried after the age of 57, you would then qualify for your spouse's VA benefits.
Gotcha. Yeah, so it's very detailed qualifications, and there might be some people that qualify that don't even fit this, so it's up to you to reach out to the Department of Veteran Affairs to see if you can try to get that certification of eligibility. So, Angel, now that we talked about who qualifies, let's talk about what the minimum down payment is.
Yeah, so on a VA loan, the minimum down payment needed is a whopping 0%. Right?
Woo! He said a whopping 0%.
Yeah, so it's a beautiful loan, and you guys definitely deserve it. You veterans and you active duty members or service members. So 0% down. You do have to pay closing costs still, which closing costs is about another 2 and 2.5% down. But besides that, there's no down payment required for the most part. I'll go into a little bit more detail on when a down payment would be required on a VA loan.
Wow, that's amazing. 0%. What is the minimum credit score required?
So technically, if I'm not mistaken, there isn't a minimum credit score, right? You can qualify for a VA loan, but most lenders or some lenders are going to require at least a 580. Most lenders are going to require at least a 620, very similar to the FHA loan, right? Some lenders can do that 580, but most lenders want to see at least a 620 if they're going to finance you. So yeah, that's the minimum, technically the minimum credit score, even though I don't believe there is one at all for a VA loan.
Okay, gotcha. So you want to stay within that 60% range, like Angel mentioned.
620.
620% range, like Angel mentioned. What does the debt to income ratio look like for the VA loan?
Same with the debt to income ratio. I don't believe there is technically a debt to income ratio. Usually it falls similar down to the FHA, which is 56.77%. I've seen it go higher. I've had a client that qualified almost up to 60% debt to income ratio. Really what it boils down to is if the DU, desktop underwriter, which we use to submit your loan application through a computerized system, if it approves your loan, then you can go up to that debt to income ratio. It just has to approve it, which sometimes, depending on your credit score, credit worthiness, credit history, income, and other factors, it might not take it if it is above the 56.99, above 57%.
Gotcha. That makes sense. So there isn't really a debt to income ratio listed, but again, you want to try to keep your debts as low as possible. That way you have a better chance of qualifying. Angel, what do the VA loan limits look like?
So there's actually no loan limits, which is an amazing thing. I had a client buy out in Corona a VA loan about a year ago. And it was well above the FHA loan limits, and I think even above the conventional loan limits at the time. And there's no worries with the VA. So that's the beautiful thing is he qualified for it, and he was able to finance it. Right, there's no loan limits on it. So that's the amazing thing about a VA loan. It just goes back to that as long as the desktop underwriter approves it, we shouldn't have an issue.
Yeah, and for those of you that don't know, there is loan limits for the FHA loan. For the conventional loan, ranges anywhere from $562,000 to $970,000, depending on where the county is. So it's great news to know that for the VA loan, there isn't a loan limit. Angel, what are the pros of the VA loan?
So some of the pros are obviously no down payment required, right? And absolutely no down payment required for the most part.
Yep.
No mortgage insurance is required on this loan, but that's a very, very big one. That's going to save you hundreds of dollars a month, right? Which can also allow you to qualify for more of a home. Okay. So, no mortgage insurance is required. It's going to give you the cheapest payment. And what I mean by that is if you buy a home for $700,000 with the conventional, with an FHA and a VA is always going to be the cheapest. Reason for that is they have the lowest rates and they require no mortgage insurance, right? So in all technicality, you're going to have the cheapest payment compared to any program out there.
Wait, Angel, I want to stay right there with the mortgage insurance. So there is something considered a funding fee for the VA loan?
Correct. So funding fee is kind of similar on an FHA loan. It's called an upfront mortgage insurance. So a funding fee is a fee that you pay up front, but it's technically not, how would I say this? You technically don't pay for it up front, right? You pay, it gets financed into your payment. Gotcha. There we go. Lost my train of thought on that. But yeah, it just gets financed into your payment. So that's about around the 2% range. It's going to just be financed into your payment. If you have a certain amount of disability, which I cannot think of it on top of my head right now, but if you have disability due to your time in the military and you can document that, you can waive your funding fee and it's not going to be required.
Oh, wow.
Yeah.
Okay. Yeah. I go back into the pros of the VA loan.
And then, so it's going to give you the cheapest payment. And then it's like I just mentioned, it's also going to give you the best rates, right? VA is hand in hand and most times better than even an FHA rate, which really? FHA has really good rates.
Wow.
But, they have that mortgage insurance, right? And also with that, again, sometimes the VA is a little better. So, better rates. So those are some major pros to having a VA loan.
Those are huge pros, especially to know that you're going to get a great rate, low down payment, no mortgage insurance. So it's really, really, really a great option if you have the VA loan available for you. Angel, what are the cons of the VA loan?
So the cons have nothing necessarily to do with the actual loan itself. It's an amazing loan, right? It's some of the requirements that come with it.
Gotcha.
That make it a little harder. So one big requirement that unfortunately I really hate this rule with the VA loan is the termite clearance is required. So you must get a termite report done on the home, and it must also be cleared by a termite inspector in order for you to qualify for the house. The part that makes it even harder, especially in this market, is that you, the veteran, cannot pay for it, right? Which is, as you know, you being a veteran, I agree you shouldn't pay for it, right? But in this market where it's so competitive, it's not ideal that you add an extra obstacle to your loan, right? Along with, the appraisals are similar to an FHA appraisal, a little bit more strict, right? But to go back into those, like the stricter appraisal, the termite clearance is required, right? Not able to pay for the termite clearance. What happens at that point is, to be honest, unfortunately, and I really hate that this happens, but it's happening in this market, is the VA loans it's hard to get accepted, right? Because people would rather not deal with that. And many, I don't know. To me, it's just, it really is a bummer to see, just because you guys are veterans. I think you guys deserve, obviously, to have a house if you qualify or if you're an active member. And unfortunate things with the loan that you guys have has nothing to do with, you guys yourselves or or your qualifications. It just has to do with the requirements that come with this loan, right?
Gotcha.
And then the last thing is, I've mentioned it's 0% down payment for the most part. And the reason I say for the most part is it's only 0% down if you're qualifying on your own or with your spouse. The moment you bring someone who is not your spouse or just yourself, then at that point, there is a down payment requirement. I don't even know the exact down payment requirement because no one really does it, right? Like the whole point of taking advantage of your VA loan is to qualify all on your own, right? Or not to qualify on your own, but to take advantage of the 0% down payment and the benefits that come with the VA loan. And at that point, when you have a co-signer who's not a spouse, most veterans are like, no, like I don't want to go that route because I want to take advantage of my 0% down, right? So
Yeah.
I do want to say it's upwards to about 10% down, though, if I'm not mistaken.
Gotcha. Yeah. I mean, thanks for clarifying the cons to the VA loan. And Angel's completely right. Right now, it's a very, very competitive market. And in very, very competitive market, in addition to, a lot of buyers waiving termite clearance and other things, some sellers would prefer a buyer that's going to wire an earnest money deposit. That's going to be showing a sign of good faith, right? Hey, here's 3% of the down payment. I'm a serious buyer. I have something to lose, right? And VA loan, unfortunately, you're not required to put, or not unfortunately, but the VA loan, you're not required to put any down payment in. So there is an earnest money deposit that's required, whereas for any other type of loan, there is, and this will make your offer stand out because, hey, you have something to lose. I have to follow the contingency timelines. Yeah. I need to follow all the regulations because I don't want to lose this 2-3% of the purchase price that I'm putting down, this earnest money deposit. Yeah. So that's something also that may be a con. However, if you do put a down payment and you're utilizing the VA loan, it may help you lower that VA funding fee a little bit. So that is something to consider. But again, this is a very competitive market. And unfortunately, VA loans are being overlooked just because they're not seen as serious buyers, or there's more guidelines to follow.
Yeah, definitely. Anthony hit a lot of good points there, but a lot of the cons right now are actually just have to do with this market, right? So once the market calms down a little bit, a lot of these cons are actually don't really mean anything, right?
Yeah,
so
absolutely.
I think we're seeing a little bit of a market turn too, so that could help us. We'll see. As with the next couple months with the rates going up and all that stuff, that kind of what we mentioned in previous podcasts. So once the market changes, though, really 3 of these cons are non-existent, right? Like the only con, in my opinion, of VA loan is you can't do 0% down, right? Yeah. I mean, the termite clearance is always going to be a negative on it, but in a market where it's not as competitive, dealing with VA loans in the past, a lot of times it isn't a big deal.
Yeah, termite clearances prior to this crazy
market,
market, it was pretty standard. Most sellers were providing termite clearance, and you're still seeing it maybe like 30 to 50% of the time, but it's just not as common practice as it once was just 2 years ago.
Yeah. And the thing too with like the VA or like with an FHA or conventional with termite clearances, they could provide a termite report that us as the lender don't need to see, right? And they can know about the work that needs to be done. And what happens at that point is I'm never aware of that there's a termite report done because it's not disclosed to us as the lender, but the client knows, and it's not anything that we can say that they did waive termite, right? And we don't know that there is termite work that needs to be done. Whereas with the VA loan, we have to see it. There's no option to say we don't want to know about the termite clearance, or we don't want termite clearance, right? So things like that. But yeah.
Okay, sounds good, Angel. And then, who is the VA loan ideal for?
Right. So we kind of went over this already on what the VA loan is, and who it's for. Same thing as it's ideal for, of course, active members of the military, along with veterans who have the correct DD 214s needed, meet those standards of the correct discharge and all those things that we explained a little earlier. Or any spouse that has the rights to their husband's certificate of eligibility and VA benefits. Those would also be ideal for a VA loan. Every veteran should take advantage of this loan. It's an amazing loan. in this market, it could be a little frustrating. I have a VA client right now that's looking. He's been looking for quite a while, and it's just hard to get an offer accepted. But be patient. I think the market's turning, and hopefully you guys can be in escrow sooner than later.
Yeah, absolutely. So the VA loan is really ideal for anyone that is a veteran and has or active military member that has certification of eligibility, right? And especially for first-time home buyers, because it's really difficult to save up for that down payment. So to be able to come in with 0%, perfect. So I just want to kind of summarize it in quick. So the VA loan is really designed for veterans, for active service military members. You're going to need a certification of employment that you can get from the Department of Veteran Affairs. Certificate. Yeah, you're getting a certificate of eligibility that you can get from the Department of Veteran Affairs. The pros to the VA loan are that there's no down payment requirement. There's no mortgage insurance. You get the best rates and ultimately the most affordable payment. The cons to the VA loan is that termite clearance is required. The veteran cannot pay for termite clearance. It's harder to get your offer accepted, and then cannot use 0% down if you have a co-signer that is not your spouse. So I hope this gives you, homies, a really good idea of what the VA loan is, how to qualify for it, what the pros and cons are. Angel, where can we find you at?
At Your Mortgage Angel on Instagram. And I'm sorry, I just want to say, any veterans listening, thank you so much for your service. We really appreciate it.
Yes, absolutely. Thank you for your service. So at Your Mortgage Angel on Instagram, that's where you can find him. You can find us at the Luevanos Group. If you haven't already, please subscribe up to our YouTube channel. And if you ever have any questions, recommendations, video topics, podcast topics, please let us know. We're always trying to do what we can to service you, homies. Exactly. With that said, I want to wish you all the best. Take care.
Thank you.
Have a great day. Hey, homies, it's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.